Hello, welcome to Oasis Trading Avenue, and my name is Noel. And today I'll be talking about how to understand how the volatility 75 market works and the rules that will guide you to be able to do what trade this particular market or have an edge in trading this market. Okay, so now let's hop onto the chart and let me explain certain things to you. I've bulleted some points down that would help us make this video today. So my first point is to avoid consolidation markets. Okay, as we all know, we know how the market works. The market works in three ways: either trending to the upward direction, trending to the downward direction, or ranging or consolidating market. Okay, so ranging or consolidating market is where prices don't have a particular direction that the market is going. Okay, so that being said, prices are telling us not to do what, to venture into this particular market, which is the consolidating or ranging market. Okay, the reason why this is being said is that volatility 75 index or the volatility market trends a lot and it moves on match pips in a particular direction. So you just need to identify the swing low and the swing high and just enter into your trade. Okay, probably let's say the impulse and the correction, you enter from your correction and you take the impulse, exit at the exit of the impulse or something. So that being said, you just need to avoid the ranging market, because sometimes some people start their accounts as low as what, $10 in volatility indices. Okay, and with this $10, the little drawdown can just wipe off your account. So you just need to be cautious and stick to the trending market. It's not advisable for you to go into the ranging market, okay, unless you are pro trader. For that one, unless you are pro trader, maybe your system allows you to trade ranging market. Our second point is telling us to do what? Is to keep an eye on the 4-hour time frames, the 4-hour and the 1-hour time frames, and watch out for the supply and demand zones. The supply and demand zones being said that we know the law of supply and demand. We know the law of supply and demand. So for instance, when you are in the 4-hour time frame, okay, when you are in the 4-hour time frame, you should be able to do what? You should be able to identify the supply and demand zones around that particular time frame, and how should I even put this? Identify the supply and demand zone around that time frame and look at the candlestick patterns or the price chart patterns that is forming around that particular area. So if you understand whatever I'm saying, is that when you get to that particular zone, you need to identify the price action patterns that is happening around that zone. Are we having a wedge? Are we having a cap? Are we having a head and shoulder pattern? Are we having a flag? All those type of things, ascending triangle. You need to identify all those things around that particular zone. Are we having, let's say, a candlestick pattern, that's the hammer, the shooting star or something? Okay, you should be able to identify all these things. Okay, so let's go to the third point. Please, the third point is mainly is just that since the volatility 75 or the volatility market is very volatile, as the name implies, you don't need to use a huge how should I put it, a huge lot size, because the little drawdown is going to do what? Wipe your account into zero. Okay, so if you are using a larger lot size in this market, per your strategy, and if you know your strategy is very good enough to handle that, or let's say your account balance is very good enough, you can use a larger lot size to be able, and for that one the risk is on you. But due to my professionality and how I understand how the market works, the volatility market works, the little pip accumulation can make you a lot in the market. So I would really advise you guys to stick to the 0.001 lot size. Okay, the fourth one is, if you don't know the market trend, don't trade at all. Like as I explained to you guys earlier on. Okay, as I explained to you guys earlier on, we trade on the trending market. Okay, the market is supposed to trend for us to be able to enter into the market. This is an upward trend where the market is moving upward, and this is a downward trend where the market is moving what downward, we don't trade consolidating or ranging markets. That is something we don't do. Okay, we don't do this. We just trade this one, we trade this one. Okay, we trade either the upward trend or the downward trend. We don't trade ranging or consolidating markets. You should keep this in mind. So if you can't identify any trend in the market, just don't hop into the market. There are more opportunities that will come for you to identify your potential exits in the market. Okay, and one thing I also study one thing I also look at when anytime I want to enter into the volatility market is my support and resistance. I like to draw my support and resistance, but I do this with my line chart. This is the line chart here. Okay, so the line chart helps me to do what? Clear out noise in the chart. Okay, clear out noise in the market. Okay, so that is what I look at my support and resistance zone. When price react towards that zone, what candlestick patterns am I seeing? What price chart patterns am I seeing? I consider all these things to be able to enter into this trade. Okay, and price action is basically we need to see break of structure to be able to identify if trend is continuing or not continuing. Okay, we need to identify all these price chart patterns and this thing, and the market structure, how market is going and how market is going to react, how market is how the structure of how the market is forming. Okay, how the structure of the market is forming. Sorry. Okay, so that being said, you need to identify if the market is either trending. We have break of structure. Okay, all these type of things. I consider all these things before entering into a volatility market. Okay, probably specifically the volatility 75 market. Okay, so this point, let's go into the chart and let me explain something to you. Okay, so this is my chart. Let me go into the 4-hour chart. So this is my 4-hour chart. Why is my this messing up like that? So this is my 4-hour chart. So the first one, I'm not looking for a ranging market. I just identify a trending market. So as you can see, from here to this side, it's a trending market because I have something like this. I'm having something like this. So this will enable me to do what? Enter into the market. Okay, so that being said, I'm just using this chart as an example. So probably with this chart, the little retracement, I can enter from the retracement, take my profit here, retracement, take my profit here, something like this. You see, probably take my profit here, retracement, take my profit here, until we saw a market structure being broken, being violated to the upward side. Okay, so these are things I consider. Okay, and one thing, before I enter into any trade, I go to my line chart to be able to filter hot noise. As you can see, look at how the line chart is very clean. There's no noise, there's no wick projections and all this type of things. So I use this to be able to get my precise entries, to be able to understand how the market is working for me, to know the directional movement of the market. Okay, so these are all the things I consider when entering into the volatility 75 market. So after I've done this, after I've analyzed the market, I wait to see a candlestick pattern. It's either an engulfing. So as you can see around this particular place, I found an engulfing candlestick. As you can see, I found an engulfing stick here. After the engulfing stick, you can choose to enter here, then throw your stops or something, because from here to here alone is a huge pip accumulation. As you can see 30 point something percent growth in your account. So that being said, volatility 75 can blow your account. It can still make you money, but your risk to reward ratio or your risk management is what that is a very priority to us. Okay, it's something that you need to be very, should I even use passionate? You should be passionate on maintaining the type of risk to reward ratio or your risk management that you're having, because if you don't have any money in your account, you can't trade. Okay, so that being said, thank you for sticking with me. I hope I'll post more videos and explaining why I take certain trades. I'll be doing technicals and explaining other things on why I enter into trades and all.